I'm Corbett Wall with DV Auction, here with your feeder flash for Friday, May the 22nd, brought to you in part by Zactran. BRD steals pounds, Zactran pounds back. Manage the risk of respiratory disease in your herd with Zactran. Remember to observe the 35-day withdrawal period after treatment. If you want more information, go to Zactran.com or visit with your BI representative. These packers are self-serving, and normally when we're talking about that, we think that they're just ganging up with their formula contract buddies and abusing the cash sellers to try to achieve a base price for all their formulas, which guarantee them captive supplies. But the complexion of the marketing has really changed here. As we've gone through this COVID, you know, they've price gouged their way all the way up to $4.77 a pound for choice box beef cutout values. We've backed that off, but it seems like they're resisting to back off any more than around $4 a pound. So they would like to keep their cutout values right around $4 a pound. And then still give about, you know, 175 or 180 for dressed cattle, resulting in huge profits. Not as big as what they were getting 2 or 3 weeks ago, but pretty large. But as these cattle continue to get backed up, and we are improving our slaughter all the time, where we're starting to work through these cattle a little more. We haven't got back up close to normal yet, but we're gaining on it all the time. But there's a lot of cattle that are being backed up, cattle getting heavy, it's starting to get hot. That's going to be a problem. And you know, we think that it might be your cash sellers that are struggling with their big cattle the most, but actually it's their formula contract partners that are struggling as much or more than some of the guys that typically sell cash or put them on a grid or do some other kind of a more minority type of trade. But I tell you what, these formula guys, the larger corporate type feeders, they are really struggling. We're not seeing much formula trade happening. Last week, even though we had depressed slaughter, we saw a big cash trade, over 100,000 nationwide, 103,000 nationwide a week ago for cash trade. That would have been a heavy week's trade under normal slaughter conditions, but it was with a heavy, and you know, of course, we're wanting more cash trade, but it's just the way things swirl around, and this COVID deal has got everything jacked up. Not only did they have 103,000 head negotiated cash trade last week, they had 73,000 head of negotiated grids. That is the biggest I've ever seen. Normally we run about 3 to 4% of the week's volume negotiated grid, just in a few pockets. But now they're using this negotiated grid, and you think, what in the world is going on here? You know, their buddies here that they've got these contracts with that normally provide them with the bulk of their cattle, they're getting backed up and they're doing all this cash trade, and the cash trade is all current delivery within 2 weeks, and they have to pick those cattle up. If they don't pick those cattle up, they can put them back on feed for themselves, but they've got to do something with them. They can't just keep putting them off like they do these formula guys. Well, these formulas that we don't know what are, the confidentiality in mandatory price reporting prevents us from seeing what that is, and these corporate feeders desperately do not want the public seeing the formula deals that they've negotiated maybe once a year, but they don't want people seeing what kind of deals they're getting and how you know, plentiful they are and how rich they are. But evidently, as we're finding out, some of these formula deals do come back to a dressed beef value. They've got that sprinkled in there somewhere. They're all loosely based on your cash price, and that's one reason they're establishing a cash price, and they are bringing it up a little bit to save face here as they're looking down the barrel of investigation guns. But they are not trading very much formula, because some of these formulas come back around and include some of these dressed beef values in a way, and so they're ending up costing more than what the cash cattle are. So these formula cattle are too expensive for these packers, and you think, but these are their guys. These are the guys they depend on all the time. These packers are self-serving. They take care of themselves. They're going around and buying available cash cattle and moving them in some cases, and just leaving their guys that have these formula contract arrangements with them, leaving them to hang. And you think, well, isn't it a contract, the formula contract? And for the most part, what I'm hearing, they made those contracts on soft paper for a reason, and they don't really have to abide by them. They're not picking the cattle up. Some of these cattle are working towards 2 months backed up that they should have been shipped. They're sending their trucks by those cattle on the highway past those feed yards to go pick up cattle that they just bought last week. And it doesn't hardly seem fair, and I know you guys are shedding tears for these formula contract yards out there, but that's part of what's going on, and it's just they just do whatever kind of works for them, and they don't really worry about where the chips fall or where who gets hurt along the way. But it's quite the deal, and you're hearing a lot of scuttlebutt and a lot of discussion about it out in your feed yard country, and it's kind of interesting actually to see this negotiated cash. Now you guys know that we're asking for a mandated minimum negotiated cash percentage level. We talked about 3014, the bill that Senator Grassley and John Tester, the Democrat, both co-sponsored there. It asked for 50-14, 50% negotiated cash, and to get more leverage in there. Well, you see that they've been buying several cattle negotiated cash despite our harvest being backed up. What's happening? We've got this fat cattle market up to $1.20 on the top side, and this week it seems like they're buying several more cattle out of 120, 115 at least. So that's going to be quite a bit higher for the week. Got the dress sales from 175 to 190, and it's we're getting in here pretty quick to the June live cattle contract spot month. And your most recent live cattle contract for June was under 99 when a lot of cattle are trading at 120. I don't understand why these are not converging. They're supposed to converge. Maybe they will by the time June comes to fruit, but there's a pretty big disparity right now, pretty big basis. And some of these feedlots that are getting their cattle moved and getting them sold, getting them picked up, are actually getting along pretty good at this. You've got a $20 basis here at least. The cattle are selling better than what we thought they would have before this coronavirus ever started. We were getting in here towards the summer months. We knew there had a lot of cattle to get through, and now we've got them backed up. But if you can find a packer that you can get to come into your yard and work with you and get them moved out of there, you're getting along pretty darn good. But man, some of these formula guys are getting backed up. Now, we're getting quite a bit of fight back on this 50-14 bill. Some of your big outfits, NCBA, for the most part, Texas Cattle Feeders are not a fan, KLA is not a fan, and they keep sending out these different messages on why they don't support this. They're saying that it's going to cost the industry a lot. Well, the only way I can figure that they are costing the industry is the premiums that are on the formula deals, where they're plusing the market all the time. Well, if they don't have any leverage in the market, and we've got a weak market that's pulled down by basis jumpers and the like, is that really a strong way to market cattle? Those few cents that you're plussing the market compared to a weak cash trade, is that what you're calling it, that it's costing a bunch? Some other outfits are saying that well, it's not going to be good for value-based marketing, and your cattle feeders that feed top quality cattle are not going to get paid for those cattle. Really? They can't bid those cattle up if you've got competition and negotiation going on? Let's just look at what's been going on for the last many years. Okay, the area that has the highest quality cattle, the best quality cattle we have in the nation and in the world is in your Iowa region right there. Okay, Iowa has the most cash sales and the least formula sales. Okay, who's got the plainest cattle, the lowest quality grading cattle? So they'd be the poorer quality cattle, like it or not. But it's Texas Panhandle. Texas Panhandle by far has the most formula trade and the least cash trade. So that argument does not have any basis to it at all. Let's talk about what your markets did. On Thursday, your board June live cattle futures up 40 cents at 98.80. August up 60 cents at 98.22. You're going out from there, kind of mixed from up 7 cents to up 92 cents. So it was gaining, and that 92 was a ways out there. May feeder cattle up 2 cents at 126.02. August down 12 at 128.87. Going out from there on your out fronts on feeder cattle, down 37 cents to up 2. So not a big day of movement, not a lot of volatility in your cattle futures for Thursday, and we're kind of glad to see that. Your fat cattle trade had more trade on Thursday, and we're going to have another week of pretty impressive negotiated cash trade despite much lower slaughter. And remember that negotiated cash trade, by and large or almost completely, is for current delivery within 2 weeks. And you think, my gosh, these cattle are getting backed up. Why are they buying these cash cattle? I explained it to you at the beginning of the program here. But let's look at your confirmed sales on Thursday. And we've already sold on nearly 50,000 head, not counting these ones I'm fixing to tell you about, and not counting about what happens on Friday, and likely going to be more trade on Friday. But Iowa had confirmed sales 2,600 head, $120 live, 175 to 190 dressed. Nebraska 2,400 head confirmed from 115 to 117 live, 180 to 190 dressed. Kansas about 2,900 head there from 115 to 120, and Texas just 500 head there at 120. Box beef cutout values have kind of stabilized, and as I said earlier, it looks like they want to keep those right around $4 a pound, which is more than the bulk of your consumers can afford to pay. But choice cutouts 401.81, down just $2.23. Select 382.53, down 8.65. Another impressive daily movement of 136 loads of cuts, grinds, and trimmings. Your slaughter, like I said, we're gaining on it, but we're still way behind. 397,000 through Thursday. That's 39,000 more than last week, but 84,000 less than the same week a year ago. But we are gaining there. But let's talk about your feeder cattle market. Your real-time index on DV auction late in the day on Thursday at 126.75. That's up 63 cents compared to Wednesday's close there. Look at your big sales for Thursday. Winter livestock in Pratt, Kansas, about the biggest of the most receipts there for Thursday. 6,300 head, including all your feeders and cows too. But look at this automated market report from Cattle Market Central through DV Auction there, and you see that the most all your receipts were on your heavier feeder cattle, still moving cattle off graze out wheat there. But your market reporters called it steady to $2 higher. Actually looks steady to $3 higher to me as far as this automated report, but not going to argue too much there. Pretty much nailed the trend there. But let's look at your popular weights of steers and heifers there, and they're the biggest, heaviest cattle there. Sure enough, yearlings, and they've been holding them out there for quite a while. But 1,106 head of 8-weight steers there in Pratt, Kansas. Averaged 849 at 127.08. That was just about $3 higher than the weighted average from last week on similar weights. 1,140 head of steers in the 9-weight category averaged 949 at 112.53. That was about steady. On your heifers, 628 head of 8-weight heifers averaged 847 at 107.98. That was up about $1. And almost 700 head of 9-weight heifers averaged $9.26 at 104.74. That was up about $2. The biggest stick out sale that I saw in Pratt, Kansas on Thursday was 63 head of 841 pound steers at $139. That's pretty respectable right there. Farmers and Ranchers Livestock, Salina, Kansas, about 2,800 head there, quite a bit fewer than they had a week ago, but feeder steers $2 to $6 higher there. Steer calves were $1 to $2 higher. Your heifers were not really well tested any weights, but had a lower undertone on there. The best quote that I saw anywhere on Thursday was with John Anderson, Frank Hepker, Clarinda, Iowa, Clarinda Livestock Auction up there. 83 head, 626 pound steers in Clarinda, Iowa, $159.75. And that's your feeder flash for Friday.